These are 12 of the best Japanese stocks right now for 2025. They've beat the market and combined earn more than $154 billion each year. In this video, we're covering all of them from the smallest to the biggest moneymakers to save the best until the end. Starting with number 12, KDDI. KDDI is the second largest telecom company in Japan. It trades in the US under its ADR KDDIY. Today, it has a $66 billion market cap and it trades just 50 cents below its 52-week high. Right now, there are no super investors who own this business. But things don't look too bad when you look at the numbers. The company trades in line with most of its fundamentals, and the most important thing here are their free cash flows, which they're actually trading below. There's been a brief run-up in their stock price from the middle of 2024 onward, and today the company trades around its GF value. We're looking at Japan's top earners. Most of these businesses are deeply entrenched, well-established, and have moats. With the huge amount of money they're bringing in, they may be interesting companies to look at. Plus, there are some themes on our list that are going to stand out to you and may surprise you. Keep in mind though, this video isn't financial advice. It's not a buy or sell recommendation of any security. Use common sense and do what's right for you. Now, let's keep looking at our list. Next at number 11, we have Itto, which trades under its ADR in the United States as ITOCY. This is one of the handful of Japan's trading companies or soga soshas that Warren Buffett has invested in recent years. Since Buffett's investment about a year prior to the pandemic, the company's stock has more than doubled. Even with that doubling in their stock price, the company's fundamentals still look promising. They're trading below their projected free cash flows, and they're about in line with their Graham number and Peter Lynch values. But the company trades much higher than it has in the past, and it's above historical multiples. These may have been well warranted, but they're part of what influences the GF value, which is why this is 48% lower than today's stock price. Now into the top 10. At number 10, we have Mizuo Financial Group, which is tied for being Japan's second largest bank. Mizuo trades on the New York Stock Exchange under ticker symbol MFG. Today, it's a $63.5 billion business that's trading in between its 52-week high and low. There's only one super investor who owns this stock, and that's Ken Fisher, who made it a new buy in his portfolio in the last quarter. Today, MFG trades at about its tangible book value and it's below its Graham number, although it is above its historical price to sales. Remember that earnings are the main factor for how banks are valued, not their free cash flows. Mizuho's stock has more than doubled from November of 2022, and today it looks like it's priced as high as 47% above its GF value, though that is building in analyst estimates for some downtrend in their future. At number 9, we have Inpex, trading in the US under ticker symbol IPXHY. This is Japan's largest oil and gas company, and today it has a $15.5 billion market cap. It's also trading at its 52-week lows. Right now, there are no super investors who own this business. Inpex perhaps looks very attractive compared to their fundamentals. They're priced well below their median price to sales and way below their cash flows or their earnings. This is another company that's performed well in recent years, and it's up more than 3 times from their lows at the end of 2020. Their GF value comes in at $13.5 per share, up 6% from their current stock price. Next at number 8, we have a name that's familiar internationally. This is Mitsubishi Corporation, another stock that Warren Buffett has major holding in. Mitsubishi's ADR trades in the US under ticker symbol MSBHF. Today, it's a $65 billion market cap, and it's trading just 2.5% above its 52-week lows. From the pandemic to its recent highs, it was up more than 4 times. Even with recent drawdowns, it's still more than doubled. That pullback isn't fully supported by their fundamentals. Today, the company trades below its Graham number and its projected free cash flows and earnings. They're just trading slightly over their tangible book and median price to sales in the past decade. Still, because some of the muted past multiples and low economic efficiency in Japanese companies until recently, their GF value only comes in at $13 per share, still down $3 from their current stock price. Stock number 7 is another international Japanese brand. This is Honda Motor, trading under ticker symbol HMC. Today, Honda is a $40 billion car giant that's trading at its 52-week lows. Honda's making headlines as they're exploring a potential merger with Nissan to create the world's 3rd largest auto company. Right now, there's just one super investor who owns Honda, and that's a small position from Dodge & Cox. Honda's valuations may also look attractive compared to their fundamentals. They're priced well below most of these, and they're trading at just half of their tangible book, way below their Graham number or their price to median sales. Honda was founded in 1948 and was originally a motorcycle maker. Today, it's one of the world's largest engine manufacturers, making everything from automobiles and lawnmowers to robots and private jets. Their GF value comes in higher than their stock price as well. At $37 per share, that's as much as a 34% upside from their current stock price. Stock number 6 takes us to yet another Buffett holding, and that's Mitsui. This trades under its ADR MITSY. It's a $62 billion Japanese trading company that's near its 52-week highs. This is despite a stock split in 2024 that's poorly reflected here. Things for Mitsui have really taken off since Buffett started buying in 2019. In that time, their stock price has more than tripled. And like some of the other trading companies, Mitsui looks attractive based on its fundamentals and its cash flows and its earnings. It's priced slightly above its tangible book and above some of these historical valuations, which were pretty low in the past for the business. Again, some of those may have been warranted, but it's part of why a GF value only comes in at $339 per share for the business. That's down $70 from their current stock price. Now at number 5, we have the company synonymous with Japan, which first put it on the map. Founded amid the wreckage of post-World War II Japan, we have Sony, which today trades at its 52-week high and is a $131 billion business. At different points, Sony's been one of Japan's top-performing stocks. It still hasn't eclipsed its peak, which it hit back during the dot-com bubble. Different from the other Japanese companies we've looked at, today it looks like Sony's trading above some of their fundamentals. They're out ahead of their cash flows and their earnings. Still, their GF value comes in at $20 per share, and that's down just 6% from their current stock price. Today, just one super investor owns the consumer electronics giant, and that's Thomas Gaynor of Markel Group, with just a very tiny position. Stock number 4 is yet another Sogo Sosha. It's Sumitomo, trading under ticker symbol SMFG. This is a $97 billion business that's down just $1 from its 52-week high. Sumitomo's fundamentals look very similar to Buffett's basket bet on these trading companies. Right now, they're priced just above their tangible book and well below their earnings or their cash flows. Their stock has nearly tripled since the end of 2022. Some of these lower past multiples may be influencing why their GF value is only coming in at $10 per share, though analysts are also building in a slight downturn for the business's future. Japan's third biggest moneymaker is Nippon Telegraph and Telephone Company, which trades in the US under NTTYY. This $85 billion business is the leading telecom company in Japan, and it trades just $2 above its 52-week low. Even more than 2 decades later, this company's stock price is still 45 below their peak in the mid-90s. Right now, their fundamentals look attractive as the business is priced below its cash flows. This is why a GF value for the business comes in at $31.50 per share, or around a 20% upside from their current stock price. Japan's second largest earner is Mitsubishi UFG Financial Group. This is the country's largest bank. It trades under ticker symbol MUFG, and it has a $138 billion market cap. Today, it's down just 50 cents from its 52-week low. Mitsubishi UFG is up more than 3 times from its COVID-19 lows. Despite that, its stock price is still 50% lower than the Japanese stock bubble in the late 80s and early 90s. While it's not a household name, its balance sheet is slightly larger than that of JP Chase. Today, the company's priced slightly above its tangible book, but below its gram number and its earnings. There's a future decline embedded in this price, but their GF value only comes in at less than $8 per share. That's down 50% from what their current stock price is at. Now, are you ready to find out the company that's Japan's biggest moneymaker? It's, drumroll please, Toyota. Toyota today trades just $6 above its 52-week lows, and it's a $231 billion automotive giant. The company was last owned by super investors by Lee Ainsley at the beginning of 2024. Before that, it was in the Bill and Melinda Gates Foundation portfolio back in 2012. So it's been a while. Toyota's been one of Japan's international success stories, and it's been a long-term compounder in its history, though today it's off 30% from its all-time highs. From low to high, it's a 100-bagger. Their fundamentals look strong as the company's priced just slightly above its tangible book and in line with their historical sales multiples. They're not trading too favorably compared to their free cash flows, but they do look good compared to their gram number. Toyota's steady business and strong brand are part of why a GF value for the business comes in at $218 per share, or up 18% from their current stock price. Let me know if you want to see a future video on any of these businesses. The amount of finance, car, and trading companies on this list were major surprises. If you enjoyed the video and you want to support the channel for free, click the first link in the description. This will take you to Global Value's affiliate Interactive Brokers. Thanks for watching and have a great day.